YouTube. Going live on YouTube. What's up, YouTube? Have some earnings names for you. We're good? We're live? All right, we're good. Ladies and gentlemen, T3 Live's #1 best free pre-earnings analysis. We're going to go over AMGN, Electronic Arts, General Electric, Garmin, Mckesson, and also let's just talk about two names that haven't reported yet, BYND and GOOGL. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. I have so many great things to talk to you about today. First, by watching the show, you're agreeing to hold me, Mark Melnick, and T3 Live, harmless and not responsible for anything portrayed on this show. All right, let's just go into our educational pre-earnings analysis. And as I update every single time, let's just go right into how are our free earnings doing for you. So again, just to show you where we are, T-Mobile was the last one we chose. Obviously, I don't know where it's going to open up tomorrow, so I will fill it in then. But we're actually going to be adding some new names to the list today as earnings tends to heat up. And if you want to know which direction I am calling them in, you're going to have to wait and see me go over the name. So we're going to start off with this highlighted name here, AMGN, and they are going to be reporting, I believe, Tuesday after the bell. So all the names I'm going over now are either reporting Tuesday after the close or Wednesday morning, giving you a full day to potentially watch the stocks before they report, of course. As this is, of course, for educational purposes only. And I want to say technically very bullish, as you can see, just this beautiful bull flag trading above, all my moving averages here. I use an exponential 8, exponential 21, a simple 50, and simple 200. You're trading above all of them. Everything looks bullish for the name. Let's just go into earnings, talk about what the company is looking to do here and whatnot, and why I am actually bullish here on AMGN. So last earnings report, they reported on July 30th, and July 30th was right over here. It closed right here at 176.45 and opened up at 180 the next day, only to shoot up to $188. And the stock really, ever since the last earnings report, never looked back. They announced 397 per share. That beat the consensus at the time of 359 a share. 5.9 billion was $220 million ahead of the 5.68 billion that analysts expected. Now, what I really liked about this is that they're beating analyst estimates. They also raised their projection, and what they did was they sort of just adjusted the lower end. They didn't cap the higher end. Analysts are expecting 13. The company said that they were going to make $13.25 to $14.30, and now the company said, and this was again back on July 30th, a prior report. We don't know what the current report looks like. That's why we're talking about it now. Excuse me. And they raised the bottom end from 13.25 to 13.75 to 14.30, as opposed to 13.25 to 14.30. So they did raise it. I love when companies do that. They're showing confidence within themselves. They also raised their revenue view, saying they'll make 22.4 billion to 22.9 billion. The consensus was 22.59 billion. So they also raised their bottom line consensus. Their low end range was 22 billion before, and they raised it to 22.4 billion. So they're taking the quote unquote worst case scenario and making the worst case scenario look a lot rosier. Stocks trading bullishly here. I'm bullish on AMGN. I'm going to give this one 2 thumbs up. and I will be looking for bullishness into the report. So AMGN will officially be a long call. And after we're done with these names, I'm going to go over how BYND reported, Google reported, how we're going to potentially approach it as well. But let's just get right back into it. The next name we're watching is Electronic Arts, and I'll just tell you right now, it's going to be a long, and has nothing to do with the fact that I'm a gamer. The truth is, I've never played their Apex Legends game. You know, I heard it was popular. I really don't know how popular it is anymore. So obviously, that was a big revenue maker for them. But I want to talk about that. Um, so on the last quarter, on July 30th, on Electronic Arts, this was the last time they reported. The stock closed at 88.57 and opened up at 93.75. So it literally opened up like about $5 plus higher, five and a quarter higher on Electronic Arts. And ever since then, it drifted down and back up, and now it's just sort of hovering within that range per se. Now this is kind of a crazy one. They said their earnings per share for this coming quarter that they're reporting whatever before the bell on Wednesday. Like you have one more day to play it before they report without trading after hours or pre-market, right? They said they were going to make $2.60 a share. That's ahead of the 89 cents expected. However, they said their net bookings was going to be 1.23 billion versus the 1.24 billion expected. That's slightly light. They also said for the fiscal year 20, they're going to have earnings per share of, listen to this, roughly $9.22 versus the consensus of $4.52. Yeah, you're not hearing things. Yes, they just said they were going to beat the consensus revenue by more than double the consensus revenue. $9.22 versus $4.52. However, they say their net bookings for 2020 would be 5.1 billion. That was a little bit short of the 5.18 billion expected. Um, the company back then said Apex Legends and esports will be important to their growth. Of course, that's what gets it out there. I'm going to officially come out on the record and say that I am bullish in Electronic Arts. Next on the list here, we're going to go over General Electric, and this is actually going to be a key one that I'm talking about here. Do not miss what I'm about to tell you in General Electric. So we all know that General Electric is Wall Street's most, I don't know, feel bad company. It was basically supposed to be a safe investment for all the mom and pops over the past, I don't know, feels like 100 years already. Was supposed to be a safe haven for assets, a company that slowly grows and whatnot. And unfortunately, and it's really heartbreaking for some of these investors who've been holding General Electric for like years. And again, I was trading in late 90s and even in late 2000. The stock was $58.41, and the stock pretty much fell off a cliff. I mean, it's trading like one of the names that were just never able to trade alongside the market. You'd figured it was a market moving name. Absolutely not. I mean, this stock has gotten decimated. Most analysts hate this company. Hate is a strong word. They bash the out of it. They bash the living you know what out of it. And maybe rightfully so. I am going to go and make such a bold call here, and it's going to not only beat estimates, they're going to crush estimates. And I want to talk about that. I am phenomenally bullish in General Electric. Phenomenally bullish in General Electric for this earnings quarter. So let's just talk about their last earnings quarter, and it's going to explain why I'm so bullish right now. They announced right over here on July 31st pre-market, and they gapped it up 24 cents, which honestly is like a almost rounded off a 2.5% gap up in the name. I know it's hard to imagine 24 cents as a 2.5% gap up for a multi-billion dollar company like General Electric, but believe me, it is. They announced at that time And then of course it sold off here, as you remember. They announced at that time 17 cents versus a consensus of 12 cents. 28.83 billion was ahead of the 28.68 billion. This company, now what people are underestimating in General Electric is that they are so diversified. In fact, they're even classified, even right here, you can see as a diversified industrial. They do everything from airplane engines to your dishwasher to light bulbs to they have 100,000 products, right? As a result of that, and based on their factories, which I was researching, they're not going to be hit hard by this whole US-China trade war thing. They are not going to be hit hard by the US-China trade war thing. And, you know, they're talking about the 737 Max because there's General Electric. They have an aviation unit, so this whole Boeing thing had a negative effect on them. So there's still some negatives on the name, going around. But they thought they were going to boost with that included. They even foresaw the negativity in their aviation units from Boeing. Still, they adjusted higher for the first time in which I liked it in forever. They said they were going to make 55 to 65 cents on this next quarter, and that was ahead of their prior consensus of 50 to 60 cents. So in English, they're like, we're 10% better than where we were. And while for some huge growth companies, you might say, maybe that's not that big. For General Electric, a stock that has been beaten to a pulp, this is absolutely huge. CFO Jamie Miller is going trans. I think I think she is going to bring this company to the next level. She was named CFO. She transitioned from her role as CFO, and it's they were searching for the next CFO, and the CEO took over and whatever, so they moved her into a different spot. And there's a huge cultural shift in the company to take hold. That was from the CEO's last earnings report. CEO says renewables can and need to be better. Guidance drivers are low quality would sell into strength. And they just basically, when you read a GE earnings report, it's absolutely insane. And then what happened here on August 6th, right over here, as you can see, Wabtec did a secondary um, of 20.4 million shares of common stock by General Electric, and they raised money. They raised money for General Electric, and the company just gotten decimated since August 6th, as you could see. Now the company stabilized a little. Technicals are looking a little bit better than they were down here. They are slightly bullish to me, short term at least, not long term. Short term, I am going to make a very bold call here and say that General Electric is very, very bullish on earnings. I know some people would disagree, including the people who are getting paid to analyze the stock. We're bringing you the best free earnings service here, in my opinion. And if there's better free earning services, enjoy them. I'm doing this to try to bring some form of fundamental value and technical value behind some of these names reporting. And if you like the things that we're doing here, just slap the like button right now. Just slap that like button. And okay, so bullish on General Electric. Next on the list is Garmin, and many people know Garmin for they make, your GPSs. They were one of the earliest makers of your GPS, and I am going to be official on the record. All these names, by the way, are going on the record. I'm adding them all to my list. I am going to be very bullish in Garmin here, and last time Garmin announced $1.16, beat the $1 expected, 955 million. ahead of the 929 million expected. And then they raised their fiscal year 2019 guidance to $3.90 a share from 370. And I love when companies do this. They raise their revenue to 3.6 billion. That was ahead of the 3.54 billion that analysts expected. So they're showing that they could still make money. And why I still like it. This was, by the way, the day in which they gapped up off of earnings. The stock closed at 76.60, opened up at 83 and a quarter. Granted, it sold off and then rose back up. I am bullish in Garmin. I just noticed my screen, my webcam froze. Don't worry, guys. I am back. But yes, very, very bullish on Garmin here. So marking off this one with a long. I'm going to go over BYND and GOOGL earnings, which already reported. These names have not reported yet, but I'm going to talk about Mckesson, and I will be on the record that yes, Mckesson is indeed a long, and that's Mary Charlie Kilo, and let's just go ahead and go over that one right now. And taking a look at Mckesson, last time they reported was on July 31st. They announced $3.31 a share versus the 301 expected. You could just see right over here, they closed at 138.95. They opened up at, 144.70, so about a $6 gap up in Mckesson on their last earnings report. And ultimately, that's what I'm looking for. I'm not looking like really any like long-term thing here. Like, even though I did a glowing review of General Electric, to me, it's just a trade. I'm, not really thinking long term with these earnings names. It's almost like hit in, hit out, rinse, repeat type mentality. So they announced also 55.7 billion here versus the 54.03 billion expected. And the beautiful thing here is they raise. I love when companies come out and they raise their own projections. They're like, we think we could get here, and then they come out on the earnings report and say, no, we were wrong. We think we could get here. To me, that is a tremendously bullish sign. You combine the fundamentals that the company gives with the technical analysis, and you combine them together, and that's how I get these ideas. So everything that I'm looking at, I'm bullish on fundamentally, and I'm bullish on technically. They raised their fiscal 20-year earnings per share view $14 to $14.60. That's ahead of the $13.85 to $14.45. So they raised their bottom and high end by 15 cents following the completion of Change Healthcare Incorporated IPO. And if you didn't know, Mckesson owns 58.5% of Change Healthcare. And I think this is just going to be, a very bullish, glowing report from Mckesson here. And yes, I will be looking at that long. So again, just going back here, I did add all the names to the list. Again, T-Mobile already reported. I think they were like flat last time I looked. It's trading down 29 cents. So, I mean, relatively flat. It won't be, big loss or gain, at least at the moment, short of something happening in the morning. But yeah, T-Mobile barely moves. So I will obviously add that to the list. Obviously, if you are taking every single name on the list, not cherry picking, using this as an example bet, you would be up $34,924.65 as of today. Let's go ahead and talk about a couple names that reported, and I think BYND is going to be a good one to report. Please hold, slap the like button if you appreciate the fact that I turn off my mic when I have to blow my nose. Imagine you heard that. Okay, let's go right into Beyond Meat. They reported the stock is down $10.41 at the moment right now, trading after hours, bit beaten up. Again, like I look at these numbers and it just seems impossible. I mean, the bottom line is shares are going to be unleashed tomorrow, and nobody knows how people are going to react. To me, it's almost a sucker draw where they're trying to get people to just give up on the name. It's how I really feel about the name. It almost feels like all the people, and you have to realize, even with the high borrowing rates, there has to be a ton of people who shorted it from 230 all the way down here. I mean, the stock lost approximately, as of now, two-thirds of its value from that recent high. So let's talk about what Beyond Earnings did. They announced 6 cents a share. That's twice as good as what Wall Street expected. So are you really believing these analysts when the average consensus was 3 cents and they announced 6? And please keep in mind, none of these like the whole Dunkin' Donuts thing isn't even factored in. Like they didn't get money from Dunkin' Donuts. They didn't get money from all signing all these recent agreements. That's not included in this report, which is mind-blowing. They say they have a cash equivalents balance of 312.5 million and total outstanding debt of 30.5 million. That's called solid balance sheet. I don't want to bring you back to fundamentals 101, but when you're 30.5 million in debt and you're sitting there with cash equivalents of 312 million, you're not exactly sweating bullets for when your next paycheck is going to come in the mail. Net cash used in operating activities was 18.3 million compared to 24.4 million the year prior. So they're using less and less cash as they're doing this. Capital expenditures totaled 16.9 million for the 9 months ended in September compared to 18.3 million for the last year. So they're spending less, they're using less money, they're making more deals, they're destroying analysts' expectations. I'm willing to ignore that, and I'm willing to say that all sucks if your projections are bad. How's that? How's that? Well, let's talk about that. They raised their fiscal year 2019 revenue guidance to 265 to 275 million, exceeding the 240 million they previously said. The revenue consensus was 264 million by the analyst, who apparently got it wrong again. And they say their adjusted EBITDA is $20 million. Ladies and gentlemen, Beyond Meat is a profitable company. And I was going to do this whole spiel with you guys. And I was going to compare Amazon to Beyond. And I know what you guys are thinking, Mark, Amazon to Beyond. No. Let me remind you that Amazon was a place to buy books. Books. Remember those things that you used to do in school? The things that you won't go near anymore? A book? Like, you know, like a physical, like, book? Things that people are allergic to? It's like, oh, I'm sorry, Mr. and Mrs. Smith. Your son has allergies to books. What do you mean? If he reads something, he's going to vomit all over the place. That's what Amazon used to be. Now, Amazon is fighting for contracts with the Department of Defense for Amazon Web Services. Now they're sending you everything in the mail, 1-2 day delivery. Now they're streaming shows like Netflix. Do I think Beyond Meat's going to go down that path? Absolutely not. But let me tell you something about this. I am going to reiterate a $320 target on Beyond Meat. Now, some of you might be saying, like, oh, the stock is done. I speak to many people on Wall Street. I happen to know somebody who, you ready for this? You ready for this? Has 6 million shares of Beyond. 6 million shares. You could imagine the person's net worth if this is one of his positions. 6 million shares of Beyond. And he calls me up on the phone tonight, right after the earnings report. And he's in from the IPO price. So the dude is happy would be the understatement of the century. $25 is the IPO price, if you didn't know, for this 105, currently trading $95 name. And he comes to me and he calls me on the phone and he's like, Mark, what do you think I should do? And I tell him, obviously, I can't give you investment advice. He's like, I know, but talking to you like a friend here. What do you think of the company? And I come to him and I say, look, man, there is nothing more than you could have dreamed of for this company to report than what you saw. The only reason why it's going down is because Wall Street is afraid that people like you are going to dump their shares tomorrow. You know what he told me? I'm not selling a single damn share, is what he told me. I'm not looking over his account balances. I'm not looking at his positions. I'm not looking to see anything, but that's what he told me. And it sort of gives you the perspective from somebody who has over $500 million, um, between him and his family and whatever of Beyond Meat. I mean, that is an exorbitant amount of shares. I mean, that's like, I don't know, board member worthy? I don't know. What is the market cap? It's obviously a large percentage of the company. 6.3 billion. And they're obviously going to be diluting shares by adding more to the market here. At the same time, there are many other shares and whatever, and I don't know what this group of people will be doing with these shares. I don't know. But according to one person I talked to, he does not want to sell any of them. And it makes you sit there and wonder. And, you know, not to bring religion into any of this, but the person happens to be Jewish, and he happens to be religious to the point where he doesn't eat pig products or shellfish. And why is that important? Is because he also doesn't eat non-kosher meat. But he will eat Beyond Meat. He will eat Beyond Meat. And I asked him why, because I thought he only ate kosher products. And he told me Beyond Meat is what's called OK. There's like a circle with a K in it, kosher certified. So what you're doing by doing that is you're opening up the markets to people who will not eat non-kosher beef. They're going to be making chicken. I heard even rumors of seafood, which, I mean, honestly, that sounds like beyond disgusting to me. I don't know what more you would want this company to say. In terms of earnings, this makes Google, this makes Amazon in its early stages, Apple look like a joke. Companies like this are never profitable early. You're supposed to invest in these companies, and they're supposed to be profitable years later. This company just turned profitable. I do not own a single share of this company, but I will tell you, for people who do own common stock of the company, if I was reading this report, I would laugh. To me, this is going to be one of the largest buying opportunities ever. Now, does the stock go to 50 or 60 or 70, as people are saying? Want to know my opinion? You're going to get every analyst, their mother, their grandmother, their best friend's neighbor, their pet dog, the chew toy that the pet dog chews on, and the parakeet that flies away from the cat because it doesn't want to get swiped by it. You're going to have all those living entities come out bullish tomorrow on Beyond Meat. Because what Beyond Meat has proven to show here is that A, you analysts don't know what you're talking about when you give us consensus. B, we're beating hand over fist with all the supposed competition that's coming to the market for us. C, we keep raising our revenues and we turn profitable for the first time. Now, some people will say, oh my God, a revenue of 92 million and maybe what they make, $9-10 million in net revenues. People are like, and I'm sitting there like, do you remember Facebook? Do you remember Amazon? Do you remember Jeff Bezos? having to borrow millions of dollars so Amazon didn't go bankrupt? Do you guys remember this? Because his company couldn't make a dime if his life depended on it? Yeah, I'm talking about, the richest guy on the planet, Jeff Bezos. Him. This company, to report profitability at this stage, is almost miraculous. I almost want to say the company is lying because maybe they're fudging the numbers and it fooled me and I'm like, oh God, I feel so stupid. They lied about all their numbers. They didn't really make that money. And then I'd say, okay, they fooled me because it didn't make sense and they lied. But short of them being lying whatevers. Oh, by the way, they just partnered with Denny to create a Denny's Beyond Burger today. Oh, who cares about that? They're just partnering with the biggest restaurants on the planet. Who cares? Tyson is making a plant-based burger, Mr. Melnick. You have never eaten a plant-based burger by Tyson. Okay? So don't tell me about the BS competition from a product that you have never eaten. And that's me not talking to you, to the analyst out there. Give me a break. Know the Kit Kat Bars song? I'll tell you what. If you took 1,000 people right now and said, do you want to try a Beyond Burger, an Impossible Burger, a Tyson's chicken, or Tyson's version of their plant-based burger? I can just short of guarantee you that 975 of those 1,000 people will be like, give me a Beyond Burger, and 25 people would have slipped and given the wrong answer because they never heard of the products. That's what it's like. Beyond Burger is the Apple of plant-based meat. It is the Amazon of plant-based meat. Hint. You want to know who is not profitable? Every single plant-based burger on this planet with the exception of Beyond Meat. Now you want to argue Tyson is profitable because they sell chicken nuggets and real meat products, and yeah, they are profitable, but their plant-based meat products are not profitable, nor is Impossible plant-based burger products profitable. This just became the only solely focused on plant-based product market or company that's profitable. And it's so cute. Have you guys actually ever seen the Beyond logo? Excuse me, kids. I want to show you the Beyond Meat logo just so you could see it and tell you why, besides the fact that it's just genius marketing. Check this out. You see this cow over here? You see that cow over here? You want to know what that cow looks like? People look at it and they see a cow with a cape and they're like, oh, that's nifty. It's cute. Do you even understand the subliminal message here? I'm going to show you. I'm going to show you what the subliminal message is for this cow. This is the subliminal message for this cow. And it looks a little something like this. Should have a little chat box above him saying, I'm here to save you, cows. And again, you're talking to Mark Melnick, is a full-on carnivore. I do eat vegetarian meals also. I love meat. I love organic meats, whatever. I'm here to save you, cows. And you know what else he has here? I'll show you. It's kind of incredible. He has 2 eyes and a huge smiley face. And, I'd like to detail his muscle outline, but I'm not going to get to it because he's ripped. And I'll tell you here right now, the subliminal message as, I'm here to make the earth a better place, even though they sell genetically modified soy protein within their garbage contented burgers. But the vision, the view, you look at it. They're saving cows. They're doing good for the world. They're lowering their carbon footprint. Because countries like China and India really care about a carbon footprint. You know what this is? And I need to explain, and you need to listen very closely now. Being green is a very important thing. Green energy. Our Amazon factories use, renewable solar panel, fuel cell. Remember when Amazon bought a bunch of Plug Power and took a stake in Plug Power because they started using them in their little whatever forklifts that they drive around inside their factories. Being green is sexy. Not leaving a large carbon footprint, companies boast about it. Does nothing for their profitability directly, but it's an image. And if you want to think that any company is remotely close to Beyond's image, you are mistaken. Right now, without looking, let's ask the Newsbeat live room. Let's ask the Newsbeat live room. How many of you guys know out, and you guys watching right now, slap the like button if you're going to enjoy this next question, which you will. How many people know what the Impossible Burgers logo looks like, or the Impossible logo? Honestly, maybe you do. Type in 11 if you do, 22 if you don't. I have no idea what the Impossible logo looks like. I don't have the slightest clue. I have no idea. I know the only place I know that sells Impossible, and I'm 100% positive there's more places, is Burger King. And who on earth likes Burger King more than McDonald's? I drink Pepsi, not Coke, Mark. It's like, oh, God. Okay. All right. I'm going to just let you be you. None of you. None of you. Rick doesn't, Ken doesn't, Eddie, Aiku, Brian, Dave, Jose, Greg, Leah, Eddie, Mike, Shelby, Walt, Smiley, Suzanne, Alex, Thomas, Jack, Wilson, Andy, Bishwamahan, Rick, Stockman, Paul, Keith. You guys don't know, Tim. You don't know. How important is branding your image when you're trying to sell food? It's the only important thing. You see the big magical golden arches? Do you know why McDonald's sign is red and yellow? Do you know why Burger King sign is red and yellow? Do you know why Wendy's sign has red in it? Because when human beings see red and yellow, they get hungry. It brings out a carnal instinct. It's the same thing like flashing a red towel or curtain or drape towards a bull, and then it's like, and it just gets all pissed off and it runs at you with its horns coming out at you like this. Do you know why recognizing the Beyond logo is so important? Because it's more likely to get an individual like you, just like you, to walk in the store and buy a Beyond Burger. I'm giving their earnings a 10 out of 10. I'm giving what they did today 10 out of 10. And when every analyst comes out tomorrow and intelligently reiterates higher targets or raises higher targets, I think they're going to buy into this thing. It might take a couple days. I don't know. Truth, I don't care. But I know this is one of the most drama filling names on Wall Street. There are people with $50 opinions and whatever, and nobody has come out with an opinion like mine. I was the first person with a recorded video out there when the stock closed at $99.50, gapped up to 110. At that point, I put a $200 target on Beyond. The amount of flame that came my way, I swore I was going to be warm for the next 20 winters. So much flaming came my way over that post. And ever since it hit 200, it digested down, and then I got flamed again because down over here I put a 320 target, and then it rose to 239 since. Then people are like, step back, right? Do not underestimate this. This is a real company, ladies and gentlemen. A fake meat company turning profitable after its second earnings report. That's what miracles look like. That is legitimately, this stock is legitimately miraculous. Point to one thing negative. And don't even say the competition because they're blowing it out of the water so hard, you only pity them. You want to talk about their numbers? What's wrong with their numbers? They have the only brand low. Let me ask you guys, how many of you guys know what the Tyson plant-based burger packaging looks like? Or the logo for the new Tyson plant-based meat product? Who knows? I have not I've never seen it. Funny how that works. Competition? More like empty words that have never penetrated our minds. I said my piece. Analysts upgraded tomorrow. I'm going to be watching to go long or short. I have no bias in it whatsoever. All right, let's talk about Google. I went off on a little look. I've been in this. I've been actively intraday trading for 20 years. Actively, I know there's people in the room. We have people in the room who've been over. We have people in the room in their 90s. In their 90s, and God bless them because they still sign up for the annual, and it's like God bless you because and some of them have like 60 years experience and whatever. I'll tell you right now, like in my 20 years, whether that's long or short for some of you, I will tell you right now that I know nonsense when I see it. I know when nonsense goes up when I see it. Tesla going up was nonsense. And I was still bullish on it the whole way up because people are buying Elon Musk, they're not buying the company. Tesla is a garbage company that could turn into something real with a beautiful car, no doubt. Beyond Meat is showing you what it's like when people try to compete with you and it's like playing basketball against LeBron James. And you're coming in as like a high school basketball player, like I know my stuff. Then LeBron James goes like this and dunks on your face so hard that the backboard breaks on top of you. You're like, oh my God, what happened? I was competition. Yeah, sure you were. Let's take a look at Google here. Um, I said my piece on Beyond. You want to trade it with us tomorrow? Did you like my rant on Beyond? Slap the like button like yesterday. Slap this like button if you liked our rant on Beyond. Can't script this stuff. Let's talk about Google earnings. Google, for whatever reason, doesn't like to offer forward projections. For that reason, I can't really talk much about their forward projections because they offer zero of it. But let's talk about what they reported here. $10.12 misses the 12.42 expected. However, they did beat on revenue, 40.5 billion versus the 40.32 billion expected. Their paid clicks on Google properties are up 18% from the prior year. CEO says they're extremely pleased with the progress made in the third quarter. Sure you are, bro. And other bets revenue 155 million. From other bets revenue is up from 146 million. And here is what really hit me hard. The CFO says they expect continued Forex or FX headwinds in the fourth quarter. Say their cloud business continued to see significant growth in each region globally. However, the fact that the US dollar translates a lot differently to these foreign dollars is hurting the company. And this is something which is a legitimate fear. I would say, with all the good and bad expected, I would say this stock should be down 30 points. Now, obviously, looking at it at the moment, I could see it's only down 18 points. It plummeted to 1230 and then bounced hard. I will be looking to do my Mark 5 and VWAP reversal strategy. If you're in the room, you'll see me calling it out. But again, be very careful with Google. We'll discuss that more tomorrow, but we will be calling that out. And yeah, I think it's pretty fair. How about I give you the levels, including the level on Google, which we're watching tomorrow? That should hopefully bring you some value right over here. Here are tomorrow's levels today for October 29th. Support and resistance for the triple Qs. And more often than not, I'm able to make money when support breaks or resistance breaks. These levels don't always hit, but when they do, I am pretty damn consistent at it. So with that being said, ladies and gentlemen, we're going to have a webinar on Wednesday. Want to sign up? It will cost you a click of your mouse button because the link is within the description. Thumbs up this video if you liked it. Share this video if you liked it. Again, I do not monetize my Facebook and YouTube. I just literally use you guys as literally motivation fuel. I mean, we're the largest room here at T3. We're the fastest growing room here at T3. We do more video content for you here than anywhere. We're just trying to bring you as much value. T3 is trying to bring you as much value as possible through this service. And I fight for you guys every day, and I fight to bring you the best of what I have to offer every single day. Again, I really hope you guys enjoyed this video. Links in the description for a lot of things, including the webinar and my services. Happy trading, make money, and I will see you guys tomorrow on the Newsbeat Live trading broadcast. Have a wonderful, wonderful evening.